Hey everyone, welcome back to Corporate Decoder, the place where we take complex financial documents and untangle them to find the hidden truths behind the numbers. Today we are diving deep into a filing from Ambipar Emergency Response, a company that sounds like it deals with some pretty serious stuff. This is a post-effective amendment to a registration statement, and what that means is they are updating their filings with the SEC, usually to register more securities or to update information before they can officially sell more stocks or warrants to the public. But the real story here is in the financials and the risks they are facing. Ambipar Emergency Response is a major player in environmental emergency response and industrial field services. They operate globally in 41 countries, covering everything from environmental remediation to industrial cleaning and consulting services. They boast over 11,000 customers and a significant international presence, which is impressive, but also means a lot of moving parts to keep track of. Let's look at some recent performance indicators for the first half of 2025. Their net revenue hit about $2069 million, showing a healthy 9.2% increase compared to the same period last year. This growth seems to be from more subscription contracts and new deals, especially in Brazil and Europe. Their cost of services also went up, but not as fast as revenue, leading to a good jump. In gross profit, a solid 18.7% increase. That's usually a great sign for growing companies. However, operating profit actually dipped slightly by 3.3%. The report states this is mainly due to higher depreciation and amortization costs, a common issue for companies that have been acquiring and investing heavily. Like Ambipar, also their net finance cost jumped significantly by 23.9%. This is a big red flag, suggesting their debt is costing them more, likely due to rising interest rates in Brazil, which is a recurring theme in this filing. Now let's zoom out and look at the full years. For 2024, their net revenue was a significant $524.6 million, a substantial jump from 2023, reflecting their growth strategy. But here's the catch: their gross profit actually decreased by 4.2%, even with higher revenue. This means their cost of services went up even faster than their revenue, an increase of 32.5%. That's a considerable rise. This is definitely something to watch. They're growing revenue, but it's costing them more to deliver those services. But NQ jumped from 2024 5.6. That's a considerable rise. This is definitely something to watch. They are growing revenue, but it's costing them more to deliver those services. Their operating profit, however, saw a strong rebound in 2024, growing by 34.8% after being hit by other income net expenses in 2023. But net finance costs are a huge story here. They more than doubled from 2023 to 2024, reaching $58 million. This is a massive burden driven by increased interest on debentures and loans, likely due to the acquisitions and higher interest rates. Profit for the year in 2024 shows a positive net income of $9.5 million, which is a big improvement from a loss in 2023, but still a far cry from the profit in 2022. This suggests they are still navigating the financial after effects of their aggressive expansion. Looking at their balance sheet as of December 31, 2024, their total assets stand at $936.7 million. The company carries a considerable amount of goodwill, 290 inventories from the previous year. This usually represents the premium paid over the fair value of net assets acquired in business combinations, indicating a highly acquisitive growth strategy. Their total liabilities are also substantial at $643.3 million, with a significant portion being non-current loans and financing. This high debt load, combined with the rising finance costs, is a major risk factor. Companies often use non-GAAP measures to present a rosier picture of their operations. Let's look at their EBITDA, earnings before interest, taxes, depreciation, and amortization. For 2024, $5 million, which is decent, but their EBITDA margin dropped to 24.9% from 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 $24.9 million, which is decent, but their EBITDA margin dropped to 24.9% from $24.9 million, which is decent, but their free cash flow for 2024 was $78.8 million, which is positive but a sharp decrease from 230.8 million. In 2023, their cash conversion rate also dropped to 60.4%. It's important to note that their definition of these metrics may differ from others, which is a common disclosure to be aware of. Now, for the juicy part, the risks Ambipar faces. The sheer volume of acquisitions means integration risks are huge. They could face successor liability for problems from acquired companies, and significant debt from financing these deals also poses a big threat. They also mention geopolitical instability as a risk due to conflicts impacting global economy and supply chains, which is very relevant today. A notable point is the potential adverse effects from changes in US trade policy, which is a complex global issue for any international company. Ambipar is focused on continuing its international expansion, primarily through acquisitions, especially in North America. They also aim to strengthen their market share in Brazil. By leveraging the growing demand for ESG compliant services, they plan to invest in their commercial teams to boost cross-selling opportunities, which is smart given their diverse service portfolio. A key positive point here is their diversified customer base of over 11,000 clients. No single customer accounts for more than 10% of their revenue. This reduces dependency and risk if a major client leaves. Looking at executive compensation for 2024, it was around 50.4 million Brazilian reais in cash compensation. This is a substantial amount of money, but typical for companies of this size and stage of growth. The company also has an omnibus incentive plan to encourage performance, which is standard practice. The ownership structure is quite concentrated. Ambipar participants hold 70.8% of the Class A shares and 100% of the Class B shares, giving them massive control. This dual-class share structure is common for companies wanting to maintain control by founders or major shareholders. This is a critical part of the filing. The filing details up to 18.6 million Class A ordinary shares and 3.4 million warrants being registered for resale by selling security holders. This is a significant number, representing over half of their total outstanding Class A shares on a fully diluted basis, including shares from the Opportunity Agro Fund, who holds a substantial 72.9% of Class A shares. The market could see a major sell-off impacting the stock price significantly. This indicates that many early investors are likely looking to exit their positions. This section outlines how these shares and warrants will be sold. The selling security holders will determine the timing and pricing of these sales. Importantly, Ambi will not receive any proceeds from these sales, only from exercising the warrants, and as we saw earlier, the exercise price is $11.50, while the current stock price is around $14.55. So it's unlikely many warrants will be exercised for cash anytime soon. The company will bear the costs of registering these securities, which includes SEC and FINRA fees, legal and accounting expenses. But the selling security holders will cover their own selling expenses like commissions and discounts. This is standard practice where the company incurs registration costs, but the sellers bear the selling costs. Ambipar is not currently involved in any legal proceedings that management believes would materially adversely affect their business. This is good news, as legal battles can be incredibly costly and time consuming. At December 31, 2024, their total assets were about $936.7 million US, with liabilities at $643.3 million US. Their equity is $2093.3 million US. Their equity is $2093.3 million US, which is about $654 million US. This highlights their aggressive acquisition strategy, impacting their balance sheet size. For the year 2024, their net revenue was 3.2 billion res, or about $524.6 million US. This is a substantial improvement from 2023, when profit was only 17.2 million reais, showing a recovery but still a low profit margin relative to revenue. Res showing a recovery but still a low profit margin relative to revenue. Res showing a recovery but still a low profit margin relative to revenue. Net cash generated from operating activities in 2024 was 421.4 million, whereas a significant increase from 78.5 million in 2023. This is a positive sign that their core operations are generating more cash. Investing activities show a significant outflow of cash in 2024, likely due to debt repayments in activities. Show a significant outflow of cash in 2024, likely due to debt repayments in activities. Show a significant outflow of cash in 2024, likely due to debt repayments in activities. show a decrease in cash spent on acquisitions which align with their strategy to focus on integration. Their financing activities show a significant outflow of cash in 2024, likely due to debt repayments activities show a significant outflow of cash in 2024, likely due to debt repayments. These notes are crucial for understanding the numbers. For example, the business combinations note, note 7, details around 20 acquisitions by the end of 2024. The amount of goodwill from these acquisitions is substantial at over 1.8 billion reais by the end of 2024. Their total loans financing and debentures outstanding at December 31, 2024 stand at 1.4 billion reais. This is a significant debt burden, but they are actively managing it with a clear payment schedule. Alright, so what's the story here? Ambipar Emergency Response is a company on a mission to become a global leader through aggressive acquisition and expansion. They have strong revenue growth and improved profitability from 2023 to 2023 to 2023 to 2023 to a large amount of shares being sold by existing shareholders are significant risks. Their future success hinges on their ability to integrate these numerous acquisitions, effectively manage their debt load, and navigate a complex global economic and geopolitical landscape. Given the recent performance in 2023 to 2024, their futures effectively manage their debt load and navigate a complex global economic and geopolitical landscape. Given the recent performance improvement and strategic focus on core operations and ESG compliance, there's potential for growth, but the market overhang from selling shareholders and the rising cost of debt cannot be ignored. It's a high-growth, high-risk story. Investors need to be comfortable with this dynamic. That's our breakdown of Ambipar's latest filing. What are your thoughts on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.